Okay, good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 24,000 psychological level. Since then, the Dow has experienced the consolidation breakout above the 24,500 points. Subsequently, the follow-through buying interest was noted as the Dow has once again re recaptured the 25,000 psychological level, and the follow-through buying interest was noted on yesterday on the Dow Jones Index as it continues to close higher for the past four consecutive trading days. Following the recent breakout above the 25,000 psychological level, we could expect further upside on the Dow Jones Index towards the 25,400 points. That will be the immediate resistance for now, followed by the 25,800 level. In the meantime, the 24,500 will serve as the immediate defense for now. The good thing on the Dow Jones Index now that is that the uptrend index orientation formation was recently re-established again. The MA 20, 60, and 120 has been in line. The gains over the past couple of days was mainly spurred by the stronger than expected corporate earnings, while on yesterday, the US Federal Reserve Chairman Jerome Powell has maintained his stance on the gradual interest rate hike. Similarly, on the broader market, the S&P 500 has earlier recovered from the 2700 psychological level. Since then, we did see a healthy consolidation breakout above the 2750. Subsequently, the S&P 500 has recently breached above the 2800 psychological level as well, forming a good bullish engulfing candle on yesterday. Following the bullish engulfing candle, we could expect further upside on the S&P 500 towards the 2850 or even towards the previous all-time high at the 2872 points. In the meantime, the 2750 will serve as the immediate defense for now. Some updates on the crude prices. Crude prices has earlier recovered from the EMA 120, which is around the 63, 64 US dollars barrel level. Since then, we did see a consolidation breakout above the 67 towards the 68. Subsequently, the crude prices trended towards the recent peak of around the 75. After hitting the 75, we did see renewed weakness on the crude prices again amid the concern over the oversupply condition. So for now, we need to monitor for this to see how the 67 level holds. If the 67 level cannot hold, then we might see further pullback on the crude prices back towards the 63. But if should there be a recovery from this point onwards, then we could see a recovery back towards, or even back towards the previous peak around the 75 US dollars per barrel mark. All in all, crude prices is still forming the higher high and also the higher low formation. So for now, we maintain our the crude prices on the uptrend formation until it violates below the 63. Only we can confirm for the reversal pattern. Okay, some of this on the local front. The FMKLCI has retraced towards the 1660 level. Since then, we did see a good double shape formation or double bottom formation breakout above the 1700 psychological level. Following the breakout above the 1700 psychological level, we did see the follow-through buying interest was noted on the FMKLCI as the key index powered above the 1730 resistance level as well, trending higher for the past 7 consecutive trading days. Following the sharp recent gains, we could see further upside on the local bulls towards the next resistance along the 1760, while any pullback for now will be a healthy pullback towards the 1730 towards the 1700 before the next upward to resume on the FMKLCI. Given the recently overbought condition, any pullback for now will be a healthy pullback on the key index for investors to digest the recent gains. On the FM small cap index, it's also traded on a similar manner, just that it's not as strong as the FMKLCI. We did see the FM small cap index has recovered from the 13,600 points level, forming good bullish engulfing candle. Subsequently, we did see the follow-through buying interest was noted on the FM small cap index climbing back above the EMA 20. And then on the next 2 trading days, we did see the FM small cap index continues to maintain its stance above the EMA 20 level as well. On indicators wise, we did see the MACD histogram has already issued a buy signal over the past 2 to 3 trading days, whereas the RSI has crossed above the 50 level. For now, we expect some rotational play on the FM small cap index, for it to creep higher towards the 14,500 points level. On stocks wise, we can watch out for, firstly is Chrono. Chrono has then recovered from the recent low of around the 43 cents a level. It has staged a technical rebound towards the 72 cents. It has retested the 72 cents on twice, but it fails to break above that and subsequently pull back and traded on a sideways manner. And recently, we did see Chrono has experienced the symmetrical triangle formation breakout above the 62 cents level on yesterday, accompanied by some of the improvement in volumes. Following the breakout above the 62 cents, we did see the MACD indicator is approaching the zero level, whereas the RSI has already recovered above the 50 level over the past 2 to 3 trading days. Following the breakout above the 62 cents, we could expect further upside on Chrono towards the first target price at the 69 cents, followed by the 72 cents. The stop loss point will be located below the 57.5 cents level on Chrono. On Burma's Auto, we did see Burma's Auto has again recovered towards the recent high of around the 2 ringgit and 47 cents, forming a double top formation. After hitting this 2 ringgit and 47 cents level with some of the high volumes being traded, it formed a dodgy candle and subsequently pulled back towards the EMA 120 and recovered. So for now, for Burma's Auto, we need to monitor for this short-term consolidation breakout above the 2 ringgit and 30 cents. It attempts to break out above the 2 ringgit and 30 cents level yesterday, but it did not close above that. So for now, we need to monitor for the breakout and a closing above that. Only we can confirm for further upside on Burma's Auto towards the 247 or even towards the 2 ringgit and 60 cents level. Your stop loss point will be located towards the 2 ringgit and 18 cents. Should there be a breakout and a closing above the 230, we could expect the MACD indicator to issue a buy signal, whereas the RSI could be recovering back above the 50 level as well. On CCMD Bio, we did see CCMD Bio has been trading higher towards the 1 ringgit and 49 cents level, which is also the 10-year high. After hitting the 1 ringgit and 49 cents, we did see a healthy pullback on CCMD Bio towards just the EMA of 120 and form a good bullish engulfing candle yesterday as price gap up and also closed above the EMA 20 level. So for CCMD Bio, we need to monitor for this short-term consolidation breakout to confirm for the breakout, pullback, and the continuation pattern for CCMD Bio to trend towards the 149. That will be the immediate target price for now, followed by the 1 ringgit and 60 cents level. Your stop loss point will be located below the 1 ringgit and 25 cents level on CCMD Bio. Should there be a breakout above the 1 ringgit and 34 cents over the short-term period, we could expect the MACD indicator to issue a buy signal. The RSI also could be rising back above the 50 level as well. On our EWIN, price has again staged a first wave of rally. It's traded on a sideways manner supported along the EMA 9 level. The next phase of rally accompanied by some of the high volumes and subsequently pull back and traded on a sideways manner over the past 1 month trading period, accompanied by some declining in volumes. But on yesterday, we did see EWIN has formed a gap up formation as price recovered from the EMA 20 level, accompanied by some of the improvement in volumes. So on EWIN, we could expect further upside towards the 87 cents or even towards the 95 cents level. Your stop loss point will be located below the 73 cents level on EWIN. Since there's no bearish divergence signal at current juncture, we could expect further upside for EWIN to at least retest the 87 cents level over the short to medium term trading period. For BCM Alliance, just give me a minute for the chart to load. Okay, for BCM Alliance, we are seeing some of the high volumes being traded on our BCM Alliance as of late compared to the earlier part of the year. We did see BCM Alliance has again recovered towards the 18.5 cents level from the low of around the 14 cents. Subsequently, staged a pullback and traded on a sideways manner. But on yesterday itself, we did see BCM Alliance has recovered and also closed above the EMA 20 level, accompanied by some of the improvement in volumes. So for now, We need to monitor to see if there's any follow-through buy interest above the 16.5 cents. Should there be a follow-through buy interest above that, we could see further upside for BCM Alliance to at least retest the 18.5 cents, followed by the 20 cents level. The stop loss point will be located below the 15.5 cents should there be a breakout above the 16.5 cents level. Following yesterday's closing above the EMA 20, we did see the MACD indicator has already issued a buy signal, whereas the RSI has already risen above the 50 level yesterday. Last company for today will be Kaylee. Kaylee, we did mention earlier on for the flat formation of breakout or the breakout pullback and the continuation formation as price has formed the bullish engulfing candle. And recently, we did see Kaylee continues to maintain its stance above the EMA 60 and EMA 20 level. And the good thing on Kaylee now is that the uptrend in that orientation formation was recently established yesterday. The EMA 9, 20, 60, and 120 has been in line. So this could be the short-term breakout, pullback, and a potential continuation pattern that we're going to monitor to see if there's any follow-through buy interest above the 90.5 cents. So, 91 cents. Should there be a breakout above the 91 cents, further upside will be seen for Kaylee towards the 99 cents or even towards the 1.03 cents level. The stop loss point is supported below the 80 cents level on Kaylee. If you have any questions, you can put in the chat box and I'll reply you shortly. There's some questions here on TunePro. TunePro, earlier we did mention that price has experienced this symmetrical triangle formation or breakout that we're going to monitor to that for price to continue to trend higher towards the 96.5 cents or even towards the 104 cents level. The stop loss point, you can use the EMA daily EMA 9, which is currently located at the 91.5 cents as your trailing stop loss, and your final defense will be located towards the 88.5 cents level on TunePro. Everything is very positive on TunePro right now. As you can see that the MACD indicator has been slowly creeping higher throughout this period of time. So this could be the next wave of a rally for TunePro towards the 104 cents. On Penta, most of the technology stocks has been on a strong rally phase. One of it is also Penta. Penta has made the consolidation between the 2.19 cents towards the 2.59, and on yesterday itself, we did see a breakout above the 2.59 cents level on Penta. Following the breakout above the 2.59, any pullback for now will be a healthy pullback for us to accumulate before the next uptrend will resume on Penta towards the first target price at 276 towards the 2 ringgit and 92 cents level. So the first target price is at 276 towards the 292. Your immediate stop loss will be located below the 2 ringgit and 45 cents level on Penta. If you can take further risk, the final defense will be located towards the 237. So the immediate stop loss is at 245, followed by the 237 level on Penta. Everything is also quite positive on Penta right now. As you can see that price has been steadily trading higher, accompanied by some of the rising volumes. The volumes are also not on a peak side yet. That means that there's still room for Penta to go until we can see like volumes hitting something like 14 to 15 million shares. Then we could take caution on this counter. On Pi, earlier we did see the trend line breakouts. Subsequently, we expect the price to see a pullback. It did pullback and subsequently continues to trend higher, hitting the first target price at the 1.44 cents towards the 153. And on yesterday, we did see for the follow-through buy interest beyond the 1.53 cents level. For now, any pullback on Pi towards the 153 will be a healthy pullback before the next uptrend to resume towards the next target price at the 1 ringgit and 78 cents level. Your stop loss point will be located below the 1 ringgit and 44 cents level on Pi. On Micron, price has again staged the one-day rally towards the intraday high of 50 cents. Subsequently, it gave up all its intraday gains, most of its intraday gains, and subsequently traded a sideways manner. So for Micron, We need to monitor for this short-term breakout above the 42.5 cents. Should there be a breakout above the 42.5 cents, then we can trade Micron towards the 50 cents. The stop loss point will be located below the 39.5 cents level for Micron. For now, we expect just a sideways consolidation until there's a breakout above the 42.5 cents with some of the high volumes. Only we can confirm for the next wave of recovery. Just that this counter is quite liquid, so it's better for you to not to hold too long on this company. On Wong Engineering, its price is still on a downtrend formation. The MA9 still below the 20, 60, and 120. Price has been earlier traded towards the 83 cents level. Subsequently, on yesterday, we did see a bullish candle, but the bullish candle was not accompanied by some of the high volumes. So for now, we need to monitor for the breakout above the 90 cents. Only we can confirm for the recovery for just a technical rebound. A technical rebound will see Wong to recover towards the 1 ringgit or even towards the 1 ringgit and 7 cents level. The stop loss point will be located below the 83 cents level for Wong. So any recovery from now will be just taken as a technical rebound. On Brahim's, is as the bottoming out formation. Earlier price has been trading towards the 24 cents level. Once again, it made a good recovery towards the 50.5 cents. Subsequently, price gave up or is against back towards the 24 cents. However, throughout this period of time, we are seeing the higher low on the MACD indicator, just that the price is the low is on the sideways on the price indicator. For now, we are seeing a good breakout, short-term breakout, a pullback, or this could be taken as a flat formation, a breakout above the 30.5 cents level, accompanied by some of the high volumes being traded on Brahim's. So for Brahim's, we need to see if should there be a breakout, pullback at this point onwards. It would be a healthy pullback towards the 30.5 cents before the next uptrend to resume for Brahim's towards the first target price at the 39 cents, followed by the 42.5 cents level. Your stop loss point will be located below the 30.5 cents level for Brahim's. Just that the volumes is a bit high right now. Any pullback will be a healthy pullback. Probably like something like previously, high volumes, a pullback without significant volumes, and subsequently it managed to break out again. So it could be trading on a similar manner. If there's no further question, then we'll end the morning briefing for today. Thank you.